Are you ready for some great news? Channel seed purchases now qualify for rewards through Bear Plus. Growers can earn an average of $7,500 per year through Bear Plus rewards. It's time to earn cash back on our robust portfolio of over 60 eligible high-performance products and start getting more out of your investment. Visit channel.com/Bear Plus rewards to find out more about how you can start earning today. These figures are based upon average earnings per grower in the market year 2023. Bear Plus earnings are paid upon valid net grower sales minus returns and replants.
You here on the Rural Radio Network. Good afternoon. Welcome to the Channel Final Bell. On today's program, we're joined by Brian Splitt from agmarket.net. Brian, thanks for taking the time and visiting with us here today. Just quickly in general here, end of the day, you've got corn settling from 4 to almost 8 cents higher. Soybeans, looks like we're going to settle out there from 17 to 21 cents higher, and then wheat in Kansas City in positive territory as well, up 6 to 8 cents. First of all, just your thoughts post-report day, and looks like there's some weather into the headlines today and a few other things, but just maybe your thoughts on the day's trade today overall.
Really a positive day overall, and was led by the soybeans and really the soybean oil. Soybean oil in the May contract was up 255 points. That is not far from a limit move of 300, and really driven by the conversations. We've got a team of biofuel and big oil that are supposed to come together and provide some guidance as far as what the big picture biofuel guidance will be. And that has a lot of optimism in soybean oil. That's, a topic of conversation really for the last 2 years since we started talking about renewable diesel. And so very strong there. That had the soybean market up about 20 cents across the board. And what looks positive in the soybeans, you had the old crop soybeans, May being the front month contract, had what you would call an outside day higher. So we had a little follow through from yesterday's selling from the report. We took out yesterday's lows in the night session, and then we ended up closing above yesterday's highs and made a new high for this particular move. So that looks good. We closed above the 100-day moving average in May soybeans, so that looks good. And we've got the 50 and the 200-day moving average within striking distance. And what's interesting is soybeans have not been able to get above their 200-day moving average meaningfully, so on a more than just a one-day close since about January of 2024. And so I think that would be something where if you consider what the corn market did when it closed above its 200-day moving average for the first time in December, we immediately went on a 60-cent run. So it'll be interesting to see if the soybeans can kind of overcome a lot of the negative tariff conversation, the conversation about the size of the South American crop, which we've really known for several months, and maybe get a little bit of upward mobility here when I think a lot of the trade has been thinking the market should go down. So that'll be interesting to see. The wheat market strong as well, led by the KC. KC wheat, and if you look at new crop, is in a very well-defined trading range. 550 is the low end of the range, and 650 is the upper end of the range. And even with us here at about 570, 6 3/4 for a settlement today, we're still down at the lower end of this big picture range. So with some of the concerns in HRW growing regions, building dryness in some of the production areas, the risk reward with us at the low end of the range looks like we potentially have some upward mobility in that market as well, Chad.
All right. Well, let's go back to soybeans and kind of hit on that. You talked about what the charts looked like, technical point of view. I guess being under that long-term average for so long, if we could poke above that, any thoughts on what might happen? Would you see a bunch of selling up there, or do you think that's a jumping off point?
Well, it's resistance until it is not. So until we can get through the 200-day, we have to expect the behavior that we've seen continue. And so for November soybeans, that would mean resistance at the 200-day would be at 10.45. And on the May contract, the old crop, that's at 10.48 1/4. So pretty close in price. Until we see the market really get through those numbers, close above them, and then start to see the funds willing to buy soybeans above the 200 instead of selling it against the 200, again, the behavior that we've seen has been the status quo. So we have to break status quo in order for us to get through there. But again, I would say if we do, and again, that's with an asterisk next to the if we do, then I think you would see a change of sentiment. And again, I'm just going off of the behavior of corn, but corn spent a lot of time below the 200, and just like the soybeans, the failure that we had in May of last year was at the 200-day moving average in corn. Well, we took out the 200-day moving average in late December, and then we kind of bounced around in early January against it. And once we really lifted off, that was a 60-cent move that happened really in the course of about a month and a half. Now, I would tend to think that if you could get the soybean market above its 200-day moving average, you're going to see something similar. I tend to think that with beans generally moving more than corn, if corn made a 60-cent move, maybe the beans could see something to that extent or more. But again, I think that's a really, really key moving average for the technical setup of soybeans.
Okay. Following the soybean oil, like you said, up, almost under 300 points, but up over 200 points. In soybean meal, I don't know, are you any thoughts about that? Because we were positive in part of the day trade, just didn't finish there. Thoughts on that?
Well, the problem with soybean meal is that when soybean oil is the star of the day, you're generally not going to get buying in meal. So on a day-to-day basis, usually it's one or the other. And that's just because of the oil share, right? So if we need to crush more soybeans because the oil side of it is warranting profit, we're going to use that oil, but there's going to be a lot of meal left over. So I think, if anything, meal has shown us that there's good support down in the 280 to 300 zone, but it just hasn't been able to get off of its butt. So we're down at the low end here. And I think at some point, if we get some upward mobility and we do get beans to get through some of these moving averages and really start to get a leg higher, then what I've seen previously is sometimes you get the bean oil to move, the beans then follow, and then all of a sudden, a month later, meal looks really cheap compared to the other two, and then it'll make a delayed move. So we might need to kind of languish down in this 280 to 300 area, continue to build good demand for meal before we see a move higher. But 280 is back down to lows that we saw back during COVID. It's holding support. We just haven't been able to really get the rally going.
Again, we're visiting with Brian Splitt from agmarket.net. Stay tuned. The second half is coming up in a moment on the Rural Radio Network.
Market updates and insightful commentary on Final Bell. Keep up with rodeo and Western lifestyle through Breaking the Barrier and the Nebraska Rodeo Update, and sharpen your marketing skills with Grain IQ. RuralRadioNetwork.com, the Rural Radio Podcast Hub, the one place to hear it all.
Welcome back to the channel Final Bell on the Rural Radio Network. I'm Chad Moyer. Again, Brian Splitt from agmarket.net with us today, and spent a lot of time talking about the soybean complex in that first half. Maybe just thoughts on corn. Again, a positive day, 4 to 7, almost 8 cents higher in some of the contracts. What are you watching as far as corn right now? Is it technical? Is it fundamental? What are you watching?
Well, of course, day to day, there's going to be whatever the headline is of the day, and that's going to provide support or resistance based on that. But when I look at the chart, I think there's some pretty positive signals right now. And if nothing else, we have really defined that 440 is a absolutely major level of support for May corn. That translates to about 450 on July corn. And this really all goes back to lows that we had back in mid-December. And from that low, we absolutely took off into the middle part of February. On May corn, that low was down at 442 and a quarter. After making the February highs, we broke drastically on tariff talk and went down to 442 and a half. And then last week on Friday, we made lows of 442. And after that Friday low, we closed higher on the day, and we closed above the previous day's high. So that was an outside day higher on May corn. So that was your first signal that corn was a buy, was that outside day higher. Yesterday we had the report. We actually went right back down and rechecked that low end again one more time before closing higher yet again, back above the 200-day, and then more follow through today. So I think the corn market, if nothing else, has defined a low end of the trading range where we should see good support. I would say the upper end of the trading range is going to be probably that 475 to 480 zone. Hopefully we can work our way right back to the upper end of the trading range. But there's some things looming out there talking about, is there some dryness building in the safrinha corn crop? Is that something that could be supportive? But yet again, we go back to, hey, we're going to have tariffs, and we're going to be dealing with that conversation tomorrow. As far as what is announced by the administration, then what's the retaliation from other countries? So I think there's still going to be a lot of positive and some negative here thrown in there, and I think you're going to see some continued volatility. So again, if nothing else, I think we've carved out a low end of the trading range in corn. Hopefully we can get back to the upper end of the trading range, and maybe we trade up and down here a little bit. I think as we get into the the April WASDE report, there's still that nagging conversation about corn for export, and the export pace that we have suggests that at some point the USDA should increase corn for export on the balance sheet. Now, I think there's also some conversations based on, hey, if we did this much for corn for ethanol and we had this much for inspections leaving the country, and our stocks at the level that they gave us yesterday on the report would suggest that maybe our feed demand is not quite what we thought it was. So I think you could see the conversation of the exports being friendly, maybe getting the corn market to lift up again into the April WASDE report. But even if they do address the export front, I wonder if it might be offset, at least to a certain extent, by feed. And remember, we had an awful lot of birds that were killed, and we've got the lowest amount of cattle right out there. So the market in cattle and the prices that we're seeing out there are a function of the lack of animals. And so those two things combined, you would say, all right, that's maybe reasonable that the feed number could come down even if the corn for export goes up. So maybe we're stuck in this 1.54 type of a carryout. I think if we did see old crop work its way below 1.5, then we could see a whole new burst of buying. But we're going to have to see the exports really outweigh any potential losses on demand from feed.
All right. Just with our time that's left, kind of look forward, and you mentioned it a couple of times, this impending tariff deadline of April 2nd tomorrow. What are your thoughts on that? And I guess, how do you think the market is going to react to that, or what do you think we're going to be looking for with that tomorrow?
Well, again, I think you could probably see some volatility, but it's interesting. I mean, here we are talking about it on the radio. It's not like it's a secret. It's not like the fund managers out there that are deciding whether to buy or sell corn, soybeans, and wheat don't know that this is coming out tomorrow. It's very well known. It's on the calendar. We know that there's going to be a press conference in the Rose Garden. So, do they buy it today just to sell it tomorrow? They sure could. We saw an awful lot of buying into February when we knew that the whole tariff conversation was around the corner, and then all of a sudden, once it really became center stage, the prices dropped significantly. So I don't know if it's something where they run it up 20 today and then right back down 20 tomorrow, but I tend to think that the fund manager knows that this is an event that's coming, and they're buying today regardless. And so maybe they're looking at other things or some bigger picture things beyond the tariffs that has their interest peaked.
For folks that would like to follow along with what you guys are doing over there, give us your contact information. How can we get more?
Check us out online, www.agmarket.net. You can reach our general line at 844-4AGMARKET, so it's 844-424-6758. And if you'd like to speak to me directly, it's 815-665-0463.
As always, great information. Brian Splitt with agmarket.net on today's program. Do remember, trading of commodity futures and options does involve substantial risk of loss, might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local dealer. I'm Chad Moyer on the Rural Radio Network.